The market moved higher again this week, but if you think that means it's safe to buy, that's where most traders get trapped. Because this wasn't a strong breakout week. This was something much more subtle. And if you don't understand it, you're going to enter at the wrong time. 1. What the market did. S&P 500. Controlled grind. Let's start with the S&P 500. The index closed around 7,165, up about 0.7% for the week. Now that sounds positive, but look at how it actually moved. The week started choppy. Then we had a sharp dip midweek. And then, a slow recovery back to the highs. This wasn't aggressive buying. This was the market absorbing pressure. And that's important, because when markets move up slowly, it means buyers are there. But they're not rushing in. 2. Nasdaq leadership. Nasdaq 100. Tech still leading. Now compare that to the Nasdaq. The Nasdaq 100 was up over 2.4% this week. That's a big difference. While the broader market was grinding, tech was pushing. Dips were bought quickly. Momentum stayed strong. And price closed near highs. This tells you one thing: money is still flowing into growth and AI. And right now, that's where the leadership is. 3. What actually happened? Now here's the part most people miss. This week wasn't driven by one big headline. We had ongoing geopolitical tension, earnings season starting, and a market that already rallied last week. So normally, you would expect hesitation. But instead, the market absorbed all of it and still moved higher. That's not weakness. That's quiet strength. But, and this is important, it's not explosive strength. It's controlled. 4. Market structure. So what does the structure look like right now? The trend is still up. No question. Dips are being bought. No breakdown. But momentum is slowing. And positioning? It's no longer cheap. So we're in a different phase now. Not early opportunity. Not panic bottom. But not a breakout chase either. This is what I call a selective environment. 5. What you should do. If you're trading leaps, this is where discipline matters the most. Because this is where people start chasing. And chasing strength here usually leads to bad entries. Instead, wait for pullbacks. Wait for reactions. Wait for better pricing. Earnings are coming. And earnings create volatility. That volatility is your opportunity. Not this slow grind higher. 6. Risks. Next week. Going into next week, there are 3 big risks. Major earnings from big tech, any geopolitical escalation, and a market that's already slightly extended. So don't try to predict direction. Focus on reaction, because the next move will come from how the market responds, not the news itself. So here's the one thing to remember: the market is strong, but not forgiving. If you chase, you get trapped. If you wait, you get paid. Thank you for watching, and see you in the next video.